This is the week for all you economic geeks like myself. It is Fed Week. The Federal Reserve's coming out on Wednesday telling us exactly what they're going to do. So what are they going to do this week? So let's analyze a lot of the information that they look at. So here's what we're seeing. The Federal Reserve keeps raising rates. They want to cure inflation. So let's take a couple of the chunks of the pieces of the data that's in the inflation numbers, like lumber, oil, the house equivalent rents and things like that. Let's look at the data that the Federal Reserve looks at to see what the heck they're going to do at this week's meeting. So without further ado, let's get to it. We saw last week mortgage rates popped once again based on the economic news we have it on Friday. Now, Friday was basically the tide changer. The jobs number came in and it was a little bit better than expected. I'll say it was a lot better than expected. And that's kind of freaked out the markets. They're saying, okay, well, the jobs market isn't cooperating with the Fed. But the conundrum there is the unemployment rate went to 4%. That's what the Federal Reserve is watching. So if you're confused with all this, hang tight. Let's get to today's news. So the first thing you're going to start seeing everywhere is the Federal Reserve's rate decision and May's inflation data will be the key test for the stock market next week. Now, this was on Friday, so this is giving us a precursor to what's coming up this week. So this week, we're basically just sitting on the sidelines. You're going to see the stock market, a lot of the broader markets just kind of teetering on things unless there's some major data hits. What are they waiting for? They're waiting for the Federal Reserve to come out and tell us exactly what they're going to do. So there's not a lot of key economic data today. You're seeing that right through here. There's really nothing on Monday. On Tuesday, we have a 10-year auction. And then on Wednesday, the whole filibuster of information's coming in. So we have the CPI report coming in. You're going to see MOM, YOY, core, and all this. So let me explain to the newbies out there. Here's what the Federal Reserve is going to, they really monitor this. The CPI, if you look at this basically represents consumer inflation. So think of the C on the front of that. CPI is consumer inflation, okay? Then you're going to see PPI numbers right down through here. Those are coming out on Thursday. This is producer inflation, okay? So the only data we're going to have prior to is what the consumer inflation number is going to be. So let's take a little bit of a look at what the Federal Reserve's most likely going to do and some of the data that they're going to look at. So we go over to the Fed Watch tool. This is basically here. You can Google it right up top. You can look at the CME Fed Watch tool. What does this instrument really tell us, or this website tell us? Well, what's the likelihood that the Federal Reserve will change the federal funds rate at the next meeting? So what's the federal funds rate? That's the first thing you guys have got to understand. Well, the federal funds rate is the only interest rate the Federal Reserve controls. They don't control car loans and mortgages and all this other stuff. It's the federal funds rate, basically interbank lending. That's all you got to understand. So this isn't an interest rate that you and I as a consumer pay. Okay, so based on that, there's really nothing going to happen. Okay, it says right through here, 99% chance that the Federal Reserve is going to do what? Well, they're going to keep rates at the 5.25 and 5.5% federal funds rate that it's currently at right now. So you can see that right through there. But now there's a little caption right through here that, are they going to reduce rates? Well, there's a 0.6. Yes, a 0.6 chance that they might reduce rates. Now, let's look at the probability of what they're going to do at the next future meetings. So now this is what you're seeing. You're seeing June, July, and September right through here. So a lot of people are saying this might be the pivot point. Don't know, but between here and here, there's probably going to be one interest rate cut. And you can see that representative right here. But what I want to focus in on right now is some of the components, some of the major components that the Federal Reserve is going to monitor. And with the CPI monitors, which you're seeing right through here. So consumer inflation, this is one of the biggest things that the Federal Reserve monitors. I want to show you something. You see right through here. Now, this is the rent equivalent cost of homes or shelter. Okay, so right now the readings that the Federal Reserve monitors, the CPI number, the residential piece of that equation has rents increasing at 5.7% a year. Okay, you can see this chart that was just updated as of April. It's saying, well, the house equivalent rents, if you look at all of them, and that's the really dark line through here, you're seeing that's now 3.6%. Okay, so in the CPI report, the number is actually representative of 5.7. So this alone is going to cause the CPI numbers to come down. And again, the CPI number is the inflation number that you and I are paying in inflation. So the next thing we want to come over is go into another huge component that we have, especially with construction, is what lumber prices are doing. So lumber prices, you can see where we are right through here. I call this a bundle. So let's say lumber prices right now are about $500 a bundle. Okay, where were they? Okay, so that's what we really have to understand. Well, not too long ago, we were at 615. Then if you scroll back over to here, look where we were back here last in 2022. So this was about $700. If I can go further back, which I can't in this analogy, the lumber prices in June of 2022 were $1,600, basically a bundle. So it's considerably down. Now, the other piece of the puzzle that we follow, and you guys can watch on a daily basis, and I do as well, is the oil numbers, okay? Where was oil trading not too long ago? Well, if you go back to 2022, oil was $120 a barrel, went right through there, okay, June. We forward fast a year, where was it? Okay, it's 71. So, not quite half, but it's taking a dramatic plunge. Then last month when we came out with the information, gas prices were about $80, $85 a barrel. What is it now? It's about $74 a barrel. So based on the oil prices, lumber prices, and household equivalent rents, we should see the CPI numbers starting to come down quite nicely. Okay, so that's what we're going to focus in on this week, is we're focusing in on, what in the heck has happened with mortgage rates. I also want to throw out there, well, here's what's happening in the bond market right now. We have the MBS down 10 ticks. What does that mean? Well, there's no data out. So that basically means the rates aren't really going to change at all. If you go over to here, here's the top 6 products people use when they're buying their first house. Now, these aren't my rates. You can see up through there, it says Mortgage News Daily rates, mortgage rates. So what Mortgage News Daily does, they survey lenders all over the country and they ask them these 5 questions. They say, if you had somebody buying their first house, it was a single family home and it was going to be their primary home, that they're living there. And they had right through here, here's other criteria, a 780 credit score, and they were putting down 25%. What would their rate be? Well, that's what their rate would be right through here. So if that's you, then that's probably a good ballpark of where your rate's going to be. If that's not you, here's what I'd like you to do. Go to the rateupdate.com. This is my website. I'd like for you guys to figure out or reach out to us to see what you can qualify for. Okay, so if you're watching this video, you're most likely in the real estate business, or you're contemplating buying your first house or maybe an investment property. So the first step I want you to take when you go to the rateupdate.com, the first thing I want you to do is, if you're buying your first house, hit the grant finder right there. It's going to help you scan to see if you're eligible for grants all the way up to $7,500. That the nice thing about it is there's no paybacks. You don't have to pay that money back. It's a grant forgiven right when you walk out of the closing. That's number 1. Number 2, click the Apply Now button. Okay, then you're on your way. Or if you'd rather call in, you can do that also. Just go right over here, scroll down to the bottom, and you're going to see that information right there. There's our 800 number right there. And if you'd like to reach out to us via email, you can email me directly. I'll make sure you're taken care of, or I'll answer the question myself. But this will be me answering you back. So thanks for watching, guys. I'll be back later this afternoon to give you kind of what the heck's going on in the market at that time. And then I have a little bit of a curveball I'm going to throw you this afternoon. So check out the later video, because I want to start giving you guys more content, but I want your participation. So thanks for watching. I'll see you in just a little bit. God bless and have a good morning. Bye-bye.